I think this administration has been great for business in terms of tax reductions and in terms of rollback and regulation. Generally speaking, I would ignore commentary around the Fed. The Fed does a great job. Jay Powell's a fabulous guy. Leisman and I were talking before we came on the set this morning. I couldn't agree more with what he says. The real issue here is this is almost like, when I think about the Fed and what they do with interest rates, it's almost like dividend policy. Don't get so excited about the here and now and what's going to happen in September or what's going to happen in December. Rather, the second chart you showed, the long-run trajectory is what really matters. This trajectory will follow, I believe. It will go up. It's just a matter of when and how long it will take to get there. I think a 3% Fed fund number, I mean, you know, that's the job of those guys.
But to the point related to the president, do you worry at all that it becomes politicized? Even if there's a conversation, the fact that we're even having the conversation about it potentially being politicized. Andrew,
I swear to you, I have been in the boardroom. I have been with these folks. They are apolitical. And everybody says, oh, that's impossible. Nobody's apolitical. I tell you, whenever there's a hint of politics in that room, it is shut down.
Tom, you and I agree on a lot. I think I disagree with you on this. First, let me tell you, 83% of respondents, there were 42 of them to this survey, think the president should not be commenting on monetary policy. Well, let me just finish up. Yeah. 78% say it will have no effect on policy. Mm-hmm. The problem that I have, and I think you're right about Jay Powell, I think you're right about the board, is the perception. And I think once you get to a close call, is it a 50-50 or 49-51 chance that, or probably we should hike rates? I think the Fed gets into a difficult position where it has the problem of being perceived to be political. And I think if the president didn't say anything, look, he's got his guy in there. He's got his number two in there. He's got another number two coming. He's got his people there. He has no reason to comment.
Steve, ignore the rhetoric, watch the action.
You know, it's easy to say, except for it's the president of the United States.
It doesn't matter. I'm telling you, it doesn't matter.
From his most ardent supporters is don't listen to the tweets. Except for that when you wake up on Sunday morning and the president threatens to put a tariff of 30% on Mexico or Canada, as an economic supporter, I think I have an obligation to pay attention.
As a reporter, you do. But as somebody that reacts to policy and makes long-term decisions,
forget it.
Yeah. Listen, when we make long-term decisions, I just said it, right? It's long-term. All this short-term stuff is just volatility and noise, and frankly, that's negative for people like me and the market. Volatility is bad.
So the president's tweets are volatility and noise?
For the most part, yeah.
Tom, you said focus on that longer-term trajectory in terms of expectation for rates if we get to 3% in a couple of years. That implies no recession through 2020 or something like that, most likely. Does that sound right to you?
That's certainly the objective. There's lots of signals out there that throw a little caution on this thing. Steve and I were both talking this morning. The underlying fundamentals are fabulous. Boy, everybody ought to be delighted with the way things are going. The problem is, and Jamie Dimon said it in your segment a second ago, this trade skirmish, hopefully it's not a war, does tend to weigh against all the advantages of tax reform and regulatory rollbacks. So let's hope it's a skirmish, not a war. If we can kind of tread that line, this economy still has a long way to go. I will say the growth has been terrific. GDP now from the Atlanta Fed is a great tool. It is not a forecaster. It does show that the things are good. But I would say that my own data would show that while we're still seeing momentum and growth, the momentum is slowing. Of the top 10 industrial sectors in the Southeast that we follow, 3 are positive, 1 neutral, and 6 negative.